Warsh wanted regime change. A reset might need to come first. That's the headline from the New York Times, written by Colby Smith, who covers the Federal Reserve. Every Fed chair learns the same lesson. Their words are parsed so closely that anything short of absolute precision can upend financial markets and force the central bank to walk back a misconstrued message. Janet Yellen learned it at her first news conference in March 2014. Jerome Powell learned it in December 2018 when he called the Fed's balance sheet reduction autopilot and sparked a meltdown. Now, roughly 2 months into his tenure, Chairman Kevin M. Warsh is facing his own reckoning. His news conference after the Fed's July meeting confused investors and called into question his commitment to quelling inflation, which has remained above the Fed's 2% target for more than 5 years. The blunder set off a sharp market move that Bank of America economists said was typically associated with credibility shocks faced by central banks in emerging markets. Since last week, markets have stabilized, largely because of renewed hope that a deal to end the war with Iran is close. Stock markets are hitting new highs, although longer-term U.S. borrowing costs are still higher than they were before the Fed's latest gathering. The onus is now on Mr. Warsh to reset the narrative and make clear what it means in practice for the Federal Open Market Committee to have no tolerance for elevated inflation. His next scheduled opportunity will be at the central bank's annual conference in Jackson Hole, Wyoming, at the end of the month. Mr. Warsh, who has vowed regime change at the Fed and has been highly critical of past leadership, had initially wanted the speech to address what he called the big questions, such as how a wave of higher productivity fueled by artificial intelligence is impacting the economy. But more traditional, policy-focused remarks might be unavoidable to sidestep another bout of market indigestion. After that, the Fed's next policy meeting in September will be another crucial test, especially if inflation does not moderate in the coming months. As John Faust, a fellow at the Center for Financial Economics at Johns Hopkins University, put it, every opportunity he has now to speak either with the FOMC or with the public is very important. Thanks for listening. I'm your host, and we'll be back soon with more on the Fed.